It's about that time of day again. My name is Joseph. Thursday evening, January the 25th. Welcome back to your nightly newsletter. We're covering crude oil, S&P, Nasdaq, gold, and euro this evening. Crude is bearish with two strong moves lower, and I'm using a combination of a hidden channel along with what I call a reverse target for selling opportunities tomorrow morning. Speaking of selling opportunities, the S&P is bearish with a lazy, sleepy channel tonight. That tells me to avoid selling too low. We're going to treat this like a range and focus on traps with a two-legged pullback tomorrow morning. Nasdaq also bearish with an almost flat bear channel, telling me to treat this like a range tomorrow, so I'm looking for selling opportunities with buyer failures tomorrow morning. Gold is also bearish, and I'm using this strong move lower as a measuring spike for tomorrow's target. And the euro is bearish, but sitting at today's low isn't a great place to start selling. So I'm going to use a hidden channel for selling opportunities on Friday. Speaking of Friday, boy, do we have a great opportunity setting up for tomorrow's Friday session. I got a great newsletter in store for you guys and gals tonight. I appreciate you tuning in here on the YouTube channel. Before I jump in and put the plan together for Friday's session, don't forget, if you're on YouTube right now, make sure you subscribe to the YouTube video. Click that little bell icon to make sure you always get notified when I post a new video. And if you find value in today's lesson, I would love it if you gave me a thumbs up, right? Drop me a comment below the video if you have any questions along the way. In the meantime here, if you really want to stay in tune with everything we do here at School of Trade, head on over to sidewaysmarkets.com and make sure you join our mailing list. I'll put the link in the description of the YouTube video. Follow that link over here to the blog at Sideways Markets. Make sure you join our mailing list, and I'll send you an email every time I post a new video. Also, don't forget, while you're here, I post exclusive content throughout the week on my social media channels, charts, links, and updates. And speaking of charts, how easy is this? Haul the charts from tonight's video. You can have them on your computer for tomorrow, right where it says click here to download today's charts. How easy is that? All the charts from tonight's video, have them ready on your computer for tomorrow's session. And speaking of tomorrow's session, come out and grab that free pass. What are you waiting for? You're going to learn more with me on that free pass than you will anywhere else on the interwebs. I can guarantee you that. Grab that free pass if you're not a member here at School of Trade, right, and see what all the commotion's about. If you got any questions here, you can post questions below the YouTube video if you're on YouTube. If not, hit me up on live support on the blog on the right-hand side of the homepage. Looking good, guys. Thursday is in the books. Hope you guys had a great Thursday session. But you know what I always say, we're only as good as our next trade. Let's get ready for Friday. Tomorrow's Friday, January the 26th. What do we have here on the calendar? What don't we have tomorrow? That's a shorter list. We got quite a bit of news here, as you can see, as we wrap up this fourth and not final week. We got a couple days, right, for the rest of the month here next week, and then of course we'll go into that short month of February. As you can see here, though, we don't waste too much time here tomorrow morning. GDP coming out from our good friends in Great Britain. That'll be pretty much all the major news in the overnight session. You know, we also have that global summit right in Davos right now, so we might see some headlines coming out of that in the overnight London session. So keep your eyes on the headlines tomorrow, right, because there isn't much news in the overnight London session. As far as the U.S. session goes, we have a peppering here at 8:30 a.m. Eastern Time. We got durable goods, GDP, international trade, and now why don't we throw in some CPI from our good friends the North as well, all jammed in like sardines at 8:30 a.m. Eastern Time. Well, that's great because we definitely want a shot in the arm, get this market moving as we go into a Friday's session. Don't forget also, too, there are two things I want you guys to keep in mind on a Friday session. One is going to be early in and early out. Early in, early out. My cutoff on Friday mornings as far as new positions is 11 a.m. Eastern Time. And the second thing I want you to keep in mind for a Friday morning is the prior week open, high, low, and close levels. And we're going to see quite a few of those on the charts here tonight. So first things first, early in, early out. At the end of the week, we see a combination of lower volume and greater risk-taking on behalf of traders. Well, maybe not for whatever reason, but it's easy to see why, right? At the end of the week, If you're down by a lot of money, a lot of traders start throwing Hail Mary passes, right? They start taking bigger risks if they're trying to dig themselves out of a hole. Or maybe you've had a great week like we've had in our trade room, right? Maybe you had a great week this week and you're trading with house money and all of a sudden, right, you're a little more confident about your trading. You get a little bit loosey-goosey on your rules. You take some more risk, right, you normally wouldn't do, right, which is a really easy trap to fall into when you're on a winning streak. So early in, early out on Friday mornings means be careful as you go into the lunchtime session on Friday. You've got less volume because professional traders don't trade that late on Friday morning, and combine that lower volume with increased risk taking, right, or risk tolerance, and you've got a cocktail for disaster for a new trader as we get later on Friday. Trust me, I have given back so much of my hard-earned capital on a Friday afternoon, right? I'm allergic to trading on Friday afternoons, and I hope, right, you'll take my advice on that. Second thing is prior week open, high, low, close. Now, this is kind of an interesting phenomenon that we see on these markets. At the end of the week, we start seeing last week's open, high, low, and closing prices start to act like price magnets. A lot of times, right, we'll see in a moment, on Thursday night, we're already back to those levels, and we start to think, well, maybe we're going to go sideways into Friday's session. So open, high, low, close levels for last week, right, are going to come into the forefront here tomorrow morning. By the way, that trick also works for prior month levels too. At the end of the month, we start looking at the prior month's levels as well, and at the end of the month coming up late next week, right? So we'll talk more about that as we go. So those are the two important things you want to keep in mind here for tomorrow: early in, early out, prior open, high, low, close levels. And don't forget about that big news at 8:30 a.m. Eastern time. And again, if you're in London tomorrow morning, right, Trade in London session, just keep an eye, right, on the headlines, because we do have that, right, that global summit going on, right, in the middle of the winter wonderland, right, in Switzerland. All right, let's jump right in. We got a bunch to cover here tonight. We got crude, I got some S&P, I got some Nasdaq, and why don't we throw in some gold and some euro just to round things off here for us as we head off into the sunset here this evening. Crude oil first. Crude is bearish with a strong two-legged move lower, telling me that sellers are likely going to try a third leg, right, to retest that prior week high along with yesterday's low. And I'm using a combination of a hidden channel drawn off these two recent lows along with what I call a reverse target, right, which is of course be used for selling opportunities here tomorrow. Now, a couple things here on the chart right now. Do you see what I see? Yep, there's that prior week high, 64.83. Combine that with yesterday's low, and this becomes obviously an area we expect to see buyers enter the market, probably sellers taking their profit, right? So we want to be careful selling into this area down here. At the same time, we can also see one strong leg, two strong legs. And you'll notice I'm projecting a third leg, and I'm using what I call a reverse target. So in other words, if the target is to get down to that prior week high, and we already have one, two brilliantly, very obviously symmetrical legs here, right? Well, it would make a lot of sense if the sellers are trying to get back down to that prior week high and we want to see a third leg. It would make a lot of sense, right, for that area around 65.80, right, to start acting as resistance, right? That is the reverse target idea, right? Take where I think they're trying to go, use the information that I have, right, and kind of reverse engineer the area of resistance. Toss that in along with an untested reversal line. You know how much I like those. And again, finding those hidden channels. This one not as hidden because we have three tests at that low, right? But you'll notice here though, right, we've got it pinned up at those highs, and that will act as resistance as well. Anytime I see a strong move down, I look for a two-legged pullback up to resistance, right, and look for selling opportunities going back down again. Strong move down, two-legged pullback up to resistance, and down we go. And the cycle repeats over and over again. So what's my plan here for tomorrow? We're definitely bearish, right? I'm not looking to be a buyer right now. How do we play this right on the sell side? Well, first of all, what if price goes higher? Price goes higher, hopefully we get a chance here for a nice two-legged pullback. Trend line comes up, right? Two-legged pullback up into the battle zone. Maybe we get something simpler. Strong move up, pull back to the moving average, Buyers try to buy the pullback. They fail. Failure leads to strength. Strength leads to a pullback, right? And a pullback back down to retest that low. Buyer failure, strength into pullback, retest of the low. Remember, if we get that nice bounce off this low, the objective will be back down to retest the low, and then obviously from there, hold the runner down to that prior week. What if we go sideways here? This could definitely happen, right? We're sitting right on top of a measured move, for crying out loud, right? So sideways range, look out for tomorrow morning. If we're going sideways, right, bear bias to that sideways range, we're looking for selling opportunities using what we call the 2-try rule, 1 try, 2 try, and we'll look to sell back down above the top of that range. What if price keeps going lower? What if price keeps rolling lower here? What if it keeps rolling lower? If it rolls lower, we find ourselves in the same predicament. I don't want to sell low. I don't want to sell at support, right? I want to sell at resistance. Where would resistance be? Measured move will be resistance. Prior swings are resistance, right? I want to get up off of that low and back down we go, right? So if it does keep bleeding lower, stay patient, wait for that pop off the low. Eventually someone will stop selling down there and we'll get what usually ends up being the best trade of the morning once we get that pop. Well, it wouldn't be a Friday session tomorrow if I didn't talk about a reversal. You know, we oftentimes see those reversals on Fridays. How do we reverse? Well, 3 things we need, right? Strength, strong move up, pullback to the moving average, and strength with follow through, right? Strength with follow through. Keep in mind, if those buyers can't hold, this is going to come tumbling right back down. So sellers, be on the lookout, right? Even if we do see a strong move higher. Remember, as I always say, right, you can't give control to someone else, right? They've got to take it. In other words, the sellers can't lose control. The buyers have to take it. With a strong move higher, pull back to the moving average, right, and run. Once we start seeing that run going higher, usually the run going higher is pretty steep. I'll wait for a pullback, look for a hidden channel, right? And we'll try to use that hidden channel, right, for our buy on the way back up to retest that high. Sound like a deal for tomorrow? Yeah, pretty easy stuff, right? I love the idea of that reverse target, right? You're more than welcome to borrow that on any other markets that you're going to use here to analyze this technique. 1, 2, know where the target is, reverse engineer it, and that gives us a good idea, right, for where we're likely going next. Let's keep going. And don't forget, we're going to be trading this strategy tomorrow morning in our trade room, 8 o'clock Eastern time. What are you waiting for, right? Come out and do it with me. Over to the S&P. S&P is bearish with a lazy channel, which is trading just like a range. So my focus is to sell using failures as high as possible tomorrow morning. I'm also looking at yesterday's low at 25.5 as a good target and using a reverse target, right, to find a possible entry location around the highs, right, of this range for tomorrow. Very interesting here on the S&P. You're going to see a lot of this tonight on the E-minis. We have a channel. Now, if you've been a consumer of this newsletter, right, you know that I'm always looking for a channel, right, that has at least a 45-degree angle. You know, 45-degree angles are pretty easy, right? Just take it to the upper left, the lower right, and that's a 45-degree angle. As you can see, this is clearly not a 45-degree angle, right? It's a little bit flat, right? So that tells me that that flat channel, the trend is not quite strong. You can also see this channel is quite wide, right? Not as narrow, right, as that channel we saw on oil. A wide channel is treated basically like a trading range, right? I want to buy low, sell high. The wider the channel is, sellers can participate on the way down, buyers can participate on the way up. Sellers want to participate on the way down, buyers can participate on the way up. Big, wide channels allow for both sides of the market to participate. What does that mean for us tomorrow? That means be very careful selling low or buying high. This is not a market that you want to be aggressive with, because if you try buying high, right, you're actually going to be buying right into those sellers who are trying to ride this back down. on the flip side, trying to sell too low, you're going to be selling into buyers who are trying to pull this back up off of that low. That's a big, big clue for tomorrow. At the same time, I'm also looking at this as a kind of like a hidden range here. You can see we've got double bottoms. We have a single top. Obviously, this is the big question mark here, right? That move higher. But you'll notice they pull right back to that high there. So this looks like a range. How do we trade a range, right? 2 try rule, 1 try, 2 try, back down in, 1 try, 2 try, right? Back up in, right? Fade those breakouts. So we have a sleepy, lazy bear channel, right? Which is traded like a range. And then we have, again, maybe it's not a range exactly, but it sure looks like one, sure feels like one, right? That is a range, right? And we'll trade that as a range, right, as well. Ranges are all about fading those breakouts. 2 try rule, right? Focus on failures. Last but not least here, right? Last but not least, I'm looking at another use of that reverse target here, right? I've got my eye on that, right, on that low. Take that strong move down, reverse engineer off of that low, right? And that conveniently puts us up around our battle zone, which just so conveniently is placed up around the top of that range. So a really interesting, right, really interesting chart. I think the most important thing you want to keep in mind on this is the laziness of this trend, right? It's not a very strong trend. It's more like a trading range with a bear bias to it. So how do we play this, right? What's the key to this? Well, again, we look at this as a range. That becomes pretty easy. At that point, 1 try, 2 try, 2 try rule above the highs to sell back down. Down to those lows, 1 try, 2 try to buy back up, right? 1 try, 2 try off of the highs, sell back down. 1 try, 2 try off of the lows. Now, clearly with this bear channel, right, and that slight bear bias right now, the sell side here is going to be a little bit more reliable, right? Now, with that, the buy side, you can take the buy side to this, but I would always recommend that if you're going to go against the trend like this, you want to think about doing a full size position on the sell side, right? And I would do a quarter size position or a 1/3 position size, right, on the buy side. And if you take the buy side, what I would recommend is make sure that you use a bigger target, right? So, for example, if you're looking to sell off the high, if I was going to sell off the high, I would use a full size position, right? And of course, use my scale out, right? Half at the first target, leave the other half to run. On a buy side here, you need to do it a little bit differently, right? Use a 1/3 or a quarter size position. But then remember, those types of trades are going to have a lower probability, so you want to make sure you use a bigger target compared to your stop, right? So instead of scaling out of the buy side, you're going to really want to make sure you leave that, right, full position to go back up to the opposite side of that range so you can overcome the lower probability that comes along with counter trend trading. Any questions about that idea? Post a comment below the video on YouTube or send me an email to jj@schooloftrade.com. So, what if price goes up? What if price goes down? What if price goes sideways here? Well, obviously, first of all, if it goes sideways right now, we really can't do much with this, right? If it goes sideways, we're still waiting for, right, 1 try, 2 try, back down, 1 try, 2 try, right, back up, right? Fade those breakouts. The odds are much better, though, on the sell side, at least for now. What if price goes higher? Price goes higher, I'm looking for a strong breakout, right, or a breakout, right, a breakout that clearly breaks out of that range. I'm waiting for a pullback to the moving average. I'll wait for a second try from those buyers. Keep in mind, if the buyers take this thing higher at that point, it will become a bull trending environment. I'm looking for them to, of course, fail off of that high and then look for the sell back down into that range. We call this the 2 try rule. Buyers try once, buyers try twice, and don't get spooked if the second try goes a little bit higher than the first try. That's actually a good thing, because what it's doing is it's trapping in all those breakout buyers, right? Believe it or not, a lot of people actually just look for that buy. They actually buy that breakout, pullback, breakout, right? Talk about an unreliable pattern, right? But a lot of folks do that. I learned that pattern when I was a new trader, right? And no wonder I blew my first 3 trade accounts trying to do that, right? That is the definition of buying high, right? Buying at resistance. So that's the goal, right? 2 try rule. one try, two try, and then whoops, right back down into that range. Again, if price goes lower here, where price goes lower, this is where we got to be careful here. As price goes lower, it all depends on, do we get down to the low of that channel? If we get down to the low of that channel, then we're looking for that move back to the high of the channel to sell back down from there. Okay, so if it gets to the low of the channel, then we want to use channel rotation. Okay, but if we can get a strong move lower here, you want to anticipate basically, right, that buyers are going to try to fade this breakout. So what we're going to do is we're going to use what I call the fake out breakout pullback. And that means we're going to look for a strong move down. Again, not too strong. I don't want to get all the way to low of that channel because then we're going to worry about rotation back to the highs now. Get that moving average below the low of this range. And then 1, 2 try, trap high. That'll be your ticket to finish off that move right to the downside. As you can see, whether we go up, down, or sideways, I'm still focusing on selling at resistance rather than selling at support. That little tiny rule, it's so easy to say, but I'll tell you, it's really difficult to do, right, when there's money at risk with an uncertain outcome. It almost feels like our hand, right, gets taken over by something else and just makes us, right, sell as price is going lower. So that's the plan. If price drops lower, if it hits the low of that channel, wait for the channel rotation. If it doesn't, look for that fake out, breakout, pullback to the downside. How do we reverse tomorrow? Strength, pullback, strength, right? If we reverse tomorrow, strength, pullback, strength, look for that strong move going higher. Be careful though, because you can see if we do make that strong move up, look where we are. We'll be right back at these highs. So we may see a scenario where we go up, pull back, and go. We run into the top there. We may see it start to go sideways here. Wait for that trap low. Don't buy into the high, right? Recognize where you are on this chart, right? Don't just stand right with your nose at the tree. Take a step back and look at the forest, right? See the bigger picture. That will be a much more reliable strategy if these bulls can get some strength, pullback, and strength to the upside here for tomorrow on the Emini. Now the Emini looks pretty similar, right, to its little brother, the Nasdaq here. Well, who you call little brother? This little brother has a ton of volatility to it. The Nasdaq here, right? So Nasdaq obviously is bearish. It's got its own lazy, almost sideways channel, which is traded almost like a range. So I'm looking for selling opportunities using failures, right, traps, up above the high of that range tomorrow. I can also see yesterday's low down at that 88.5 area, and I can kind of reverse engineer my target, right, to see where the best entry will be. Do you see what I see here as well? Yep, absolutely. There's that prior week high. The S&P has one to the downside tomorrow as well. So don't forget on the E-minis, those prior week highs are waiting just below yesterday's range low, right, at 88.5, and that will easily be a magnet, right, for a long-term target tomorrow. Again, much like the S&P, we have, double bottoms easy, double tops, not so much, but again, right, feels a bit like a range because we have a channel, right? This channel looks like a dog. It doesn't look like the strongest thing in the world. It's relatively wide. It's relatively flat, right? We're definitely not excited about the strength of this channel. You want to see a strong channel, stay tuned for the euro, right? And the gold here coming up in just a few moments. So we know right now that both sides of the market can participate. The bears on the way down, the bulls on the way up, the bears on the way down, right? The bulls on the way up. What that tells us is that up around these highs, we're probably going to have the buyers trying to take control, and we'll look for that failure back down to retest the low. Once we get down to the low, be careful selling down the low because buyers will be trying to fade this move going back up into that range. Measured move, 1, 2, right? And of course, 3, giving us a chance here now to reverse engineer, right, that location. Watch out for yesterday's low around the 88.5, right, on the way down to that prior week high, which because tomorrow's a Friday, wouldn't surprise me at all if we finish up the session, right, by giving that 57 area test, right, at some point tomorrow morning. Now, how do we play this? What if price goes sideways? What if price goes higher, right? What if price goes lower? Well, first of all, we're coming off of the low of this channel right now, so we're expecting to see price go up, right? So first, if we see price go higher here, again, I'm expecting this to feel quite bullish, right? Much like it did earlier on in today's session. We go up, buyers want to try to buy it, moving average will come over, right? Breakout, pullback fails into strength, strength into pullback, right? And now all of a sudden, right, we're collapsing back down to that low. What if we go sideways here? Boy, what if we go sideways in the short term? Not much changes. We'll be sitting down at the low of that range, as you can see. One try, two try, back down in. Again, you really want to try to get as high up on the chart with these lazy trends like this, just because you got to remember, right, that without a lot of strength to the downside, you're going to really have to entice those sellers to get involved. And the only way to do that, right, is going to be above some of these prior swings, right, traps above those prior swings. What if price goes lower here? If price goes lower, we really got to be suspicious. We really got to be suspicious because we definitely got to be careful. We don't want to sell into this trend line down here. There's a measured move down here as well, right? So got to be careful selling into this area, right? So one scenario would be we break down. Let's get rid of this little guy right here. One scenario would be we break down, get that moving average through before we get to that low, right? Two-legged pullback and sell from there, right? Like I talk about on the S&P. The other scenario B, we get down to that low. Now, if we get down to that low, this is where I can take this low, bring it up to this high, right? And then start looking in this area right there, right, for that. See a good color on this. There we go. Right, two-legged pullback up around that high, right? So if we do end up rolling over here, right, try to use that low, bring it up to that high, right, and then bam, right, so to incorporate that, kind of like an adjusted or a modified version, right, of that channel. I mean, for all I know, right, this could be the high of the channel here. It's just a sloppy guy. Right, that could be it right there. So we'll see, right? We'll see if it just rolls over, right, and plays dead from there. How do we turn bullish? If there's one market that could easily turn bullish tomorrow, it's this Nasdaq. We came inches away from that big round number retest that I talked about in last night's newsletter before all hell break loose, right? There's a bunch of commentary overnight. The strength of the U.S. dollar, right? And that, of course, is what sent a lot of these markets reeling at the beginning of today's session. What would it take here? Strength, pullback, strength, right? We want to see these buyers really start pushing here, right, to the upside. Obviously, if these buyers can't hold this thing, right, we're going to sell this sucker back down early to mid-morning tomorrow morning, right? But if it does strength, got to pull back to the moving average, right? Strength going higher here, right? We'll try to get in as quickly as we can because you got that round number up there at 7,000. If we find ourselves in a position where it just really runs on low volume, think of that big round number like we saw it before, right? And wait for that pullback, right? And a retest of that high tomorrow. Right? So just don't trade into it, right? If you learned anything from 2 days ago's lesson, right, it's probably going to be a pretty decent pullback after we get that target tested at that big round number, right, at 7,000. And we may finish the day around that big round number. So be patient once we get up there, just because, again, tomorrow's a Friday, and we just may not see a lot of profit taking, right, if traders believe that this is a bargain price at 7,000, and we may not see sellers dare touch it, right? So we may just kind of get stuck up at that 7,000 big round number. So we got some waiting to do here on the Nasdaq, right? So kick your feet on the desk, wait a little bit, and see where this thing goes here in the overnight session. Now over to some markets that really got beat up today. As you can see, gold got hammered today. Really, all this is based on, though, is some commentary overnight about the U.S. dollar and how too much dollar strength. Kind of paraphrasing it. Some politicians basically yapping their mouth about how they wanted the dollar to be cheaper, right, not higher. And of course, right, got all hell breaking loose, right, for this gold. This could completely reverse tomorrow. Remember, a lot of times we see these news events kind of hit the tape. We get a day's worth of reaction, and then the following day, everyone's like, wait a second, why is this thing so low? And it goes right back to where it came from. So another market that could easily, kind of jackknife, right? This market could easily down, and then we could be right back up tomorrow because this move lower is pretty much just because, right, of some politicians, right, flapping their gums at some economic symposium. So we'll see what happens tomorrow. Obviously, for right now though, gold is definitely bearish. Strong spike down, proud of the week high. Look at that prior week high, right? Here we are sitting right at that 45 prior week high, which going into Friday may result in a trading range. We saw gold was just quiet as a mouse, right, for most of the morning today. It wasn't until this news kicked up, right, that we saw that big drop back down. We may see the same thing tomorrow, right? It sure looks like it's getting comfortable right now, right? Big wicks, small bodies. It sure looks like it's getting pretty comfortable right now, right? So we definitely want to see how this thing develops into the overnight session. It will, dare I say, probably go sideways. It looks like it right now. We'll see. We'll see if we get any more discussion of the U.S. dollar overnight. Again, we got that Davos summit happening right now, and who knows, right? Who knows? So keep your eyes and ears open if trading overnight session. This strong move lower, though, the strong move lower is what we call a measuring spike. This strong move. Anytime we see a strong move in one direction, we expect to see a two-legged pullback and a retest of that low. And usually, when you see a real strong move kind of out of nowhere, two-legged pullback, and then the size of this move can be used as a kind of a measuring spike, right? So spike down, take that. It can be used to measure into the future, and that projects, right, that measured move. Look left, and we can see this measured move again, kind of guessing right now, puts us back into that area where we spent, the middle of the month of January, right? Remember we had this real choppy market, right? All of a sudden the dollar gets crushed and gold runs, right? Well, wouldn't be surprised, right, if we end up back into that range tomorrow, right? So get off that low and then finish off, right, that move. So that's a little bit of a, kind of a home run target for those bears tomorrow. But if we can get into something nice and reliable at resistance overhead, hold a portion to run, we might just get lucky for a nice big run tomorrow here on the yellow metal. Take this lower low, connect up to the highs. You guys are experts on these hidden channels now, right? Strong move down, market reverses from bullish to bearish. Connect those two lows, pin up to the highs, and now all we need is one try, two-legged move back down. I got a reversal line here. You know how much I love those reversal lines, right? And of course, at the same time, right, a nice little trap high above that 56 even wouldn't be bad as well. How does this play out here for tomorrow? Well, if price goes higher, draw that trend line up. Price goes higher, two-legged pullback, right? Or maybe we get the 1-2 try. Moving average comes over. Failure, strength, pullback, retest the low, hold the runner down to that, right? Down to that larger measured move, right? And of course, you'll be right in tune then with those lows we just talked about, right, from earlier on. What if price goes sideways? Again, don't be surprised if it goes sideways, right? Strong move down. We're sitting right on top of that prior week high. Use that prior week high as a magnet. Much more reliable trading above the prior week high than to try to sell it below the prior week high. Capiche? Right? Does that make sense? That makes sense, right? Prior week levels on Fridays become magnets, right? I would rather sell above. Remember with trading range, though, one try, two try, back down in, right? Maybe we can use that 52.6 reversal line. Maybe not. We'll see where we are at that point. If we go lower here, this is where things get a little bit more difficult, right? Get that moving average to come through. Two-legged pullback, right? And we'll use it, right, as resistance going back down again. This again, right? I'd much rather sell above it than sell below it. But if that's all we get tomorrow, that's all we get tomorrow, right? And at that point, the measured move, right? The measured move would be a little bit larger, right? So the measured move would be a little bit further down, right, at that point. What if we keep going lower here? What if we keep tumbling lower here? If we keep tumbling lower, then this becomes a spike in channel. You guys know spike in channels, right? Mark up the base of the channel, all those prior swings, right? And you're looking for that trap, right? And back down in. Obviously not drawn to scale, right? But if it does keep bleeding lower, I don't sell it support, right? We sell it resistance. So find some resistance, stay patient, and wait to trade for confidence, right? Trade with confidence. Beautiful, beautiful chart here on the gold. How do we turn bullish? strength, pullback, strength. Like I mentioned, I would say this is another one of those markets. The Nasdaq had that big juicy round number to work with. Again, this whole move down on gold today was pretty much all based on speculation about the U.S. dollar. So if all it takes is for somebody else to say, no, you misread the quote. Yeah, that wasn't what I was talking about, right? This could easily go right back up where we came from, right? So you got to be aware of that potential. But remember, it's too bearish right now to guess, right? You can't be a seller yet. Oh, you can be if you want, but you better use a very small position size, have a small stop loss, and a big target, right? Because those are not the trades that you want to have make up the big collection of your track record, and you don't want to be risking the full boat, and you definitely want to make sure you have a bigger stop or a bigger target, a much bigger target than your stop loss, because you're going to have to take a few swings to predict a reversal. You know, some of the most famous quotes, right, in that old book, The Market Wizards, I think it was Richard Dennis, right? And Jack Schwager said, how'd you call the bottom on copper? You know, this is back in the 1980s, right? Commodities were all the rage. I think it was Dennis who he was interviewing. And he said, how'd you call the bottom on copper? He said, I didn't call the bottom on copper. I just kept buying it every time it went lower, and eventually it turned around. Right? Calling the bottom on a very strong trend is very, very challenging. You're probably not going to call the bottom. But if you play your cards right, use a very small fraction of your normal full position size, keep a small stop, right, or keep buying into it as it comes down, yes, you can put yourself in a position where, right, you can catch the turn on the bottom. But boy, oh boy, does it take a lot of money, right, in your account. It takes a lot of risk tolerance, and it takes a lot of, well, the average human being just isn't going to keep buying if it keeps coming down, stopping them out, right? I mean, how many more times are you going to keep trying to buy that low? Moral of the story, though, is I'd rather wait for the turn in direction, right, than try to predict the turn. It's a much more reliable strategy, as we always say, right? The markets can remain irrational, right, or going in the wrong direction much longer than we can hold on to it, right? Then we can remain solvent. So that's the plan there for gold tomorrow. Let's wrap things up here tonight on the euro. Euro is looking very similar here to gold. Obviously, there are some key differences here, though. Euro is bearish, right? It's not sitting on the prior week high, right? Whereas gold is on the prior week high. So we know the euro has some room to stretch its legs right now. We're bearish. Strong move lower, and I'm looking for selling opportunities up at those resistance levels for a target going back down to the prior week high, right? So not a lot different on the overall strategy. Now, two things you want to keep an eye on here. First, we're sitting right on today's low, right? Look left, right? Today's low is just to the left there, right? So we're sitting right on that low, right? That suggests that sellers are rejecting the idea of selling this low. Right? You can see those big wicks down there, right? This makes it, there's the low, right, today, right? So when we go up, we fail, we go back down to that low. When we get back down to that low, what are they doing? Bouncing. Now we just opened up, right, in Asia, and we're already gap down, and then we're going to close probably right back up into that range. So we have to assume that sellers are pretty comfortable right here, much like the sellers were pretty comfortable looking at that prior week high on the gold, right? So with that, we got to be careful selling here. That's kind of the moral of the story right now. I'd rather get up off that low and sell it back down from there. It's a good example. When a bull market turns bearish, it goes right back to that low. Right? It goes right back to that low, usually pretty quickly, I might add as well. And when we go back to that low, that's when I want to make sure, do we see it go through the low, right? Does it keep going, right, like gold did, or does it stall out at that low? If it stalls out at that low, now we want to think, okay, bounce and then do it again. Give the sellers a chance to sell high rather than selling low, right? Sell at resistance, don't sell at support. I know I keep saying that, right, but it's just, it's the easiest rule in the book. It's the easiest rule in the book, right? But it can be difficult for a new trader to follow that rule, right, when there's money at risk and there's an uncertain outcome. The second thing you want to keep in mind on, if you connect these lows, right, and then pop it up at the highs, right, there's that hidden channel up there, and we're just waiting for that to come into play here right now. I'm also going to bring that line down there, extend out this battle zone, and really this whole area right here, you got a resistance trend line overhead, you got a level of resistance there. This whole area right there really could be right, your battle zone. You could also look at this and say this is a measuring spike, right? Real strong move down. So if we get that two-legged pull back up, right, that measured move could be a long-term measured move, maybe not tomorrow, right, but into Monday's session as well. So what if price goes up? What if price goes down? What if price goes sideways? Well, it looks like right now we might be in store here for a bit of sideways chop here, right? Going sideways here. I want to go up, one try, two try rule, fade the breakout, right, and sell back down again. Be careful here if the price tries to go lower here, right? If it goes lower, you want to let it go lower, show some strength going lower. Don't chase it. Don't sell at support, right? Sell at resistance. That'll be a whole lot more reliable game plan, right, for tomorrow. If you always think about it this way, whenever the only option for me is to sell at support, look for a trap. Traps are two-legged pullbacks. Traps are back of a prior swing, right? Traps are wait for the market to look like it's to be bullish and then wait for the failure and sell it back down, right? Trap in all those buyers who are trying to call that reversal. So that's the trick, right? If it goes lower here, we're still waiting for that trap high. Not much changes, right? Price goes higher here. 1, 2. At that point, there'll probably be, depending on where this candle closes here, there may be some rising support here. So make sure we get that sell here, right? Sell, target, right? And then, of course, target, hold that target back down right to that prior week high. How do we turn bullish? How do we turn bullish? I would imagine you've got to get above that trend line, right? 1, 2, get above it, right? And go from there. If these buyers can show me some strength, pull back strength, that's great. We'll draw up that trend line, try to use, right, that trend line there for the buying opportunities. Of course, the target is back up to retest that high. Got a lot going on tomorrow, don't we? Right, we got that summit, right, in Europe, right, Davos. Be listening tomorrow, right, for all the headlines there early in the session. We got major news at 8:30. We got a couple lazy channels. Right, got to get those channels into gear tomorrow, right, for a Friday. We got some reversal targets, right, some reversed engineered targets for tomorrow. Oh, man. I hope this newsletter was a great investment of your time here tonight. I hope you learned a lot. Don't forget, if you have any questions for me, post those questions below the video on the YouTube channel. Don't forget to subscribe to the YouTube channel. Hit the bell icon so you always get notified when I put a new video out. And give me a thumbs up if you liked it tonight. And while you're here, don't forget, another great investment in your time. If you like my newsletter, wait till you see my free trial. You're going to love the free trial. You'll get a first-hand look at what it feels like to be a client, all my patterns, my strategies, my analysis techniques, right? And maybe a little bit of bad trading jokes, right, peppered in there along the way. See, there was one right there. I'm joking with you. Beginner, intermediate, advanced classes, always appreciate you guys, right? Give me consideration there for becoming a client. If you need more information, you can find it on the website or just simply call the toll-free number that's right under your nose, right there on the screen, and I will look forward to picking up and answering all your questions. Speaking of questions, any questions here, post them below the video on YouTube or use live support, right? And I'll be there to help you guys out 24/7. What a week. It has been an awesome week. It's been a great month of January. I hope you guys are enjoying the ride as well. Kick some butt out there tomorrow on a Friday session, but do it early, right? Do it early, and then we'll come back, right, and do it again on Monday. Don't forget, no newsletter on Friday afternoons. They do let me out of my cage every once in a while here at School Trade headquarters in Los Angeles. Speaking of Los Angeles, it's supposed to be a beautiful weekend here this weekend. Hope it is wherever you are. And I'll see you guys tomorrow morning in our trade room, 8 o'clock Eastern time. If not, same time, same place next Monday. Adios, amigos. Bye-bye.